Okay, so everyone, this is Finance Meets Real Estate. We meet here every Tuesday, 6:30 p.m. Eastern Time. We usually have speakers. I've hosted over 100 guests here so far, and we do networking socials such as today. So for today, it's just like I will allow screen sharing. So if you guys want to share anything and can be self-promotional too, if you want, that's okay. So just kind of share what you do, what's your business. And this is going to be on YouTube as well tomorrow. And yeah, that's about it. So I'm gonna start myself. So 1 second. Let's just so my company. So I'm founder of RealtyQuant. So RealtyQuant is an investment company and also data analytics company. So my mission is data-driven real estate, as some of you guys know. So that's what I focus on. So what does this mean? So investment side, so I work on different commercial, residential investment properties, so primarily in multifamily. So I'm working on 3 deals right now as well. And I have a data-driven investing course with Python. So basically it's like data analytics, financial modeling, that I've been a bit busy to put forward this quarter. And then my company has 2 products. So one is market valuations data, which is like basically if you want to know which markets are overvalued. So we're probably the vendor for that. So we have like the data for 3,000 US counties. So it's going to tell you, let's say Phoenix is maybe 50% overvalued or whatever. And it's going to tell you perhaps like perhaps Chicago is like right around fairly valued, or like things like that. And then there's like some modeling for like commercial multifamily, like lead generation. So that's another product. So I run RealtyQuant again. So it's like a prop tech investment firm as well. And so also an investor, like I mentioned. So I'm working on, at the moment, purchasing about like 120 units across 3 properties. That's about it. So our philosophy, very important to mention, like very in line with this market valuations data. So my company like invests in only undervalued or up to fairly valued US markets. So that means markets that carry low recession risk. To kind of go a little bit more into that, if you look at like the current declines in US cities, like some of the biggest declines since May and June have been, that's just 0 in Austin, Boise, and Phoenix. So Austin, Boise, and Phoenix are like top 5 overvalued in RealtyQuant data. I can go on that more like in another session, but yeah. So we don't invest in any, and if you look at like kind of most of the cities declining are to the west, so no west basically for me. So our company, again, like very recession resistant, only undervalued markets. And again, like to illustrate what that means a little bit more, just a moment. So just to give a perspective on, let's say, metro areas. So like this, like yellow column is like how over or undervalued different US metro areas are. So again, just to illustrate what my company does is, so I hire like junior people, relatively junior, and we search for deals in only these. So just basically like metro areas that are undervalued. And so the reason is what? So if we look at, let me just show. So if we get like a severe type of decline, so these last 2 counts are like predicted decline in a severe recession, mild recession. So something that's, let's say Austin, that's right around, well, at its peak was around 62% overvalued in Q2. So it has like if we had like a goal of 100 credits, get 42% decline in severe recession, only 16% in a mild recession. But in both cases, it strongly underperforms the rest of the market. So I've been speaking about this a lot. It's like a very, very strong position that I feel that passive investors should be investing in undervalued markets at this time. So that's about it. But so that's what I do. So commercial multifamily is my focus primarily right now. So I'm gonna stop the share. And so if you guys wanna, I can call someone, or whoever, if you wanna raise your hand and just kind of share your information. I see Vlad. How are you doing?
Hey, can you hear me?
Yeah, I can hear you.
I'm doing great, thanks. I'm actually dropped off the kids at the gym.
Okay.
So,
I understand.
but yeah, I'm doing great, thank you. Just a quick thing about me, I'm in Jersey, in Bergen County, North Jersey, right by New York City, maybe 10 miles away. I'm a real estate agent here, and that's how I started my real estate career, being an agent, and started doing flips, started doing some wholesaling, but quickly realized I can't really scale. And
I want you to fuck me so hard. I want you to pick me up and fuck me. I want you to choke me and fuck the shit out of me.
Wow, that was cool.
Sorry. Yeah, so I'm just saying, listen, Zoom bombing, let me make sure the person is out. So we're gonna cut this part. Yeah, I think he's, let me just make sure. Yeah, that happens. Sorry about that. Okay, good.
Yes, that's no problem. So I started doing that and pivoted to multifamily, and ever since joined Jake and Gino. That's one of the masterminds, and have been
MIA?
buying and
Like what?
MIH as
Nice.
well. Yeah.
Yep.
Yeah, MIH is a spin-off of Jake and Gino. So I'm in both, and I have been buying multifamily in Texas primarily, Houston and San Antonio, Dallas. Those are my markets, and Kansas City. But few opportunities came up recently in Jacksonville, Sarasota, and in the Carolinas. And I JV'd in Sarasota. We purchased some land, 8 acres with 7 units, but the value is not on the units, it's on land.
Mhm.
So we're going to rezone it and develop 96 condos.
Mhm.
And in the Carolinas, we bought 19 houses, pretty much long-term rentals. And now we're looking in Columbia, North Carolina, looking to buy student housing. Very excited about that one because I never done student housing, so it's a huge learning opportunity for me. I'm very excited about that one.
Right. Well, that's
those are the JVs that I kind of working on.
right. That's me. So what's your model like? How do you find projects? What, like, how do you source the deals,
Well,
or partner with people?
yeah, good question. Yeah, so in it depends on the deal. Like, for example, on 40 units in Kansas City, I found it. I called the one direct to seller, found the deal. Then I called some of my team members who are boots on the ground in Kansas City. They went to look at it, and we partner up. We JV'd on it. It's 5 people, and in this case, I found it and pretty much closed on it. So that's what happened in Kansas City. Now, in the current deal in Dallas, I am asset management and raising capital because it's 419 doors. It's a huge project. So I'm pretty excited over that one. We need to raise a little bit over, I would say, 8 million. We're 85% subscribed. It's 506C. So accredited investors only. So I'm pretty excited over that one because it's the largest project that I'll be working on. 419 doors. It's a city. So yeah.
It's amazing. Nice.
Yeah, it's but the cool thing is that it's with an experienced operator, very experienced team. And I'm more than happy to learn from them and to move things forward. So, plus we got a great loan assumption. Guess what our loan is? 2.9%.
Oh wow, that's amazing.
I know. So I'm very excited over that one.
Nice, nice. So when did you get into multifamily? What?
I started in multifamily last March.
Last March. Wow, that's very
Yeah,
very quick.
it's pretty much not even a year. I would say 10 months. And
Right.
yeah, right now I have 497 doors.
Nice.
And most of them come from JV opportunities. I do not do LP. I haven't done a single
Right.
LP yet.
Right.
Even though I do know how it works, I studied and I feel that I'm more than capable of doing the co-GP or GP opportunities there. So yeah, really excited.
I think that's awesome. It's awesome. Well, thanks for sharing and enjoy time with your kids, right? Over there.
Well, yeah, she's running around over there. I don't have
Yeah,
to do
okay.
anything. I'm
Yeah.
talking to you guys.
Cool, cool. What are next steps for you? So you're capital raising the 419 door project?
Yeah, so as soon as we're done with the raise, by the way, if anybody wants to get into this deal, please reach out to me. It's 506C, so it's accredited only. We have, like I said, we 85% subscribed, but there's still an opportunity to get in. After that one, there's going to be another one coming up in Houston. This one's 218 doors. I'm very happy over that one as well. That's going to be mid-February.
Mhm.
So I'm pretty excited. Yeah, it's not a huge raise. It's going to be maybe 4 million. So that should be really cool.
Nice. Okay, that's awesome. That's great.
Yeah.
Okay.
And after that, who knows? We'll see. I mean, I'm just kind of looking 2 months ahead, and a lot of work to be done. So I'm pretty excited on it. Really excited.
Great, great. Which city are you in? Which town are you in northern New Jersey, actually?
In Jersey, I'm in Rutherford, so it's
nice.
basically right next to the football stadium,
Yep,
to the Meadowlands.
I know it. I know it.
That's in East Rutherford. I'm a little more west. I'm about 5 miles from Manhattan, so
Yep.
like 20-minute ride.
Yep, yeah. I know the area. I used to live in New Jersey as well, so I was
Yeah.
living in Weehawken.
Oh yeah. Weehawken's like, I don't know, less than 10 minutes away from me.
Yep, exactly. Yeah. No, that's great. That's awesome. So nice, nice chatting to you, bud. So
Me
I
too,
see,
absolutely.
Siraj has raised his hand. Do you want to?
Yeah, hello? Yeah, let me turn on my camera super quick here. If you guys can see me.
Yeah, absolutely, yeah.
Yeah, hi, my name is Siraj. I'm from Bloomington, Minnesota. We're actually in the middle of a snowstorm right now, so that's why I'm all geared up here. Yeah, but I'm 20 years old and I'm just getting into multifamily investing. I've been doing my research now for about a month. I started I believe the beginning of December, and I'm just willing to learn as much as I can until I come up on my first deal. And Vlad, actually, when you said you got into real multifamily 10 months ago and you already own 400 doors, I thought that was extremely like inspiring. I look up to that.
It is.
Thank you.
Yeah.
Yeah, well, the thing is, once you get one, everything snowballs. It's a
Yeah.
huge snowball effect after that. You just gotta get the thing rolling. That's the most
Yeah.
important thing. The easiest way to get in is
Yeah.
to raise capital for a deal. That's the easiest way to get in. Like, for example, I'll just give you an example. If you can
Yeah.
tell me you can raise $500,000, you can be in a deal now.
Oh, okay. So what I'm doing right now actually is I've sent so many like just emails, and I've just been trying to connect with so many like private lenders, whether it's like local lenders or like online lenders or like nationwide lenders. And then I've also been I've also went like door to door on a few like wealthy folks and trying to just, you know, raise capital, and they'll get their money in return too if I can just, you know, raise capital that way. So that's one thing I've been working on. It's been a bit hard. I've been doing this for about 3 weeks, and I still haven't found that one right person. But I feel like networking through you guys and just learning from you guys, I'll be able to, you know, gain more information that way as well. And I'm also looking for like a partner as well. I need to surround myself with more people who have the same goal as me. So I think doing that here is a great thing. Mhm.
That's great. That's great. Well, what are your, do you have target markets, or you're looking like locally in Minnesota?
I do have a target market. There's a city here that's I want to say it's about an hour from where I am right now, and it's a city that has a population of about 82,000. It's called Rochester, Minnesota. I don't know if any of you
Yeah,
guys are familiar
I
with
know
it.
it. Yeah.
Yeah.
I
Oh,
know.
okay. Yeah, Rochester, Minnesota. They currently have uh um a property there for it's a commercial multifamily 129 units, and I'm just trying to do my best to try to make a deal work with that. And the best thing about that is that unit right there is close to so many places because it's in the heart of Rochester. So it's close to the hospital, it's close to the supermarkets. It's just a high value area overall. So
Mhm.
yeah, I think
That's
that's
great.
my target as of right now.
Oh, that's awesome. Well,
Mhm.
wishing you like the best of luck on that opportunity, right? So,
Yeah.
yep.
Mm. Yeah. And then also uh if I can connect with all you guys on LinkedIn, it would really mean a lot, just in case, you know, if I have any questions or anything you guys can help me with, it'd be great as well if I could just shoot you guys a message or
Absolutely. Yeah. Yeah. I'm pretty active on LinkedIn myself. You can check me there, Stefan Svetkov, and let's talk more. Mhm.
yeah, for sure, for sure.
Cool.
Yeah,
Awesome.
yeah, thank you so much.
Nice chatting. Mhm.
Mm. Yeah.
Yeah. Anyone else wants to like raise their hand? Maybe Peter? Do you want to go next?
Sure. Hi, everyone. My name is Peter Pan. That's my real name. It's on my birth certificate. I always find that's the best icebreaker. I'm a real estate broker. I'm here based in New York City. I'm in Brooklyn right now. I ooh, did someone get dropped? Can you guys still hear me?
Yeah. Yeah.
Okay, perfect. So I'm here in Brooklyn, New York. I've been in the business for over 15 years now. The investing over here is like a much bigger game. You have a lot of big players, especially in the city center. But in the boroughs where I focus in now, the investments over here are also growing to a point where it's not reachable. I joined Steven's networking event because I saw he had another one. I tried to join your other event, Steven, the one with the state of the market. Couldn't make it last time, so I apologize.
Oh, yeah. And by the way, we do in person, Peter. We do in-person events. We have it on 12th of January with Amy Tiemann. 12th of January.
I saw that one too.
Yep.
I signed up for all three of your events.
Yeah. Cool. No,
You're
yep.
just here to meet like-minded individuals.
Right. So you're an agent and investor basically, right? Do you do residential? Do you invest in Brooklyn or other places?
Investments in Brooklyn. When I got into Brooklyn, it was still a decade ago where it was still manageable and the investments still make sense in return. Now, no matter which metrics you use, it doesn't really make sense over here. So that's what the market has gotten into. Yeah.
Right. What are next steps for you? Like, what are you looking for in terms of, like the from the real estate community and so forth? Like, what are your goals for 2023 or and so
So
forth?
2023, I'm looking to investment wise or business wise, Stephen?
Well, both, yeah.
Sure. It's simple. My goal is to expand my network. So to meet as many people as possible in related fields and build mutually beneficial relationship. I find that's probably my strongest suit right now. As far as investment wise, I did have an idea on getting into commercial. We have a diverse type. We have a lot of different types of properties here. But I'm most interested in the mixed use, where there is a retail spot and then a multi-family above. So that would be a target.
Mm-hmm. And that's just to kind of raise the expected return a little bit in that sense, or to try to make the numbers work in a sense of the retail component potentially being discounted. And is that the thinking there, or what's the
more for my business, because I'm in the brokerage business.
Sure.
It's still a type of business that requires a physical presence in the office. So it's like building the road for future expansion.
Oh, that's nice. Yeah, that's great. It's a good next step there. So
Thank you,
awesome.
Steve. I hope your numbers prove that too.
I don't have anything on mixed use, but yeah, but thanks. So that's great, and look forward to seeing you at some of our in-person stuff too, next month. So yeah, talk more. So who they pick? Maybe Cedric, perhaps. Whoever's got their camera on, I guess.
Hello, everyone. My name's Cedric Marlowe. I'm in Philadelphia. I'm a GP in 80 units, LP in 109. I was raising capital for a deal at the end of 2022. Full transparency, I hit a big goose egg. I raised $0 for that opportunity, but I took a look at some things over the holiday, and I'm going all in on capital raising just because, a lot of people say that if you build it, they will come. If you have a deal, the money will come. It's not always true. Mm-hmm. So I'm just focusing on raising capital for this, definitely for Q1. I'm not going to be really searching for deals. I say that a little, even though I reached out to a broker earlier today to send me some information on an opportunity that I'm looking at. But for the most part, Q1 is primarily just going to be focused on raising capital. So that's pretty much it for me right now.
Cool. So in terms of raising capital, like what's your what are some of the challenges? Is it like you've seen, like, you mentioned that in the current market, maybe people being more hesitant in terms of market uncertainty and so forth, or?
Well, I think with that particular deal, it was in a smaller market that most people, wasn't Atlanta, Houston, Charlotte, the hot markets, Sure. It was in a sub tertiary market, but we're already firmly planted in that market. But I think that was definitely the big turn off on it, was the fact that people just, because of where it was located. And sure. So people just couldn't see that those returns were actually doable in a market that they know nothing about or never have really heard of. So yeah, I think that was the big turnoff with that one.
Do you mind sharing what returns you're targeting? Yeah.
We were doing if you came in with 500, you were getting 10% 10% monthly. You were getting that on a monthly basis. And then if you came in with 100, you're going to get 7% cash on cash. I'm sorry, 10% cash on cash with the 500. And then with the 100, you're getting 7% cash on cash. You're looking at a 22.5% AAR. And with the 500, you're going to get a 20% AAR 5-year hold.
Wow, those are amazing returns.
Mhm.
Yeah,
Absolutely.
those are great returns.
Yeah, absolutely. The returns were there. But it was like I said, it was a sub-tertiary market, and it was in Mississippi. And so people are like, Mississippi, what's down there outside of the river, you know? So that's just it, you know, even though I educated them on the market, you know, had a video from the director of the what do you call it, Economic Development Council, and all of that. It just you know, people just couldn't see, you know, it wasn't the hot market. That those same returns, had I said Dallas or Houston, people would have kicked my door in, you know, trying to get there. But it is what it is. So I know that I still have some things that I have to work on in terms of reaching out to the various people. And so that's why I say Q1, I'm going to focus on those things that I haven't done so far with raising capital and reaching out to, you know, people that's in my, you know.
Yeah, that's interesting. I mean, those returns are very good. Yeah, in Dallas or Houston, San Antonio, those markets you will not get such returns. I mean, 10% cash on cash is I'm not gonna say unheard of, but there I say unheard of now. I mean, you're looking at 6 to 7 cash on cash, but no more than that.
Yeah,
But
I agree, Vlad.
But Q1, it's very, very difficult to raise capital just because it's a tax season. So a lot of people are holding back money because they're thinking they're going to owe money in taxes. So, in my opinion, and I have heard some others speak on it as well, one of the most difficult times is to raise in Q1. So, don't be disappointed if you're going to have a lot of no's. It is just that's how it is.
Okay. Have other people that's on the call run into that before Q1? Well, I'll tell you like this, Vlad. I can actually speak for last year because I was raising for 124 unit, literally Q1 of last year, and I got no bites, and it was in Lubbock, Texas. I figured, okay, it's Texas, you know, it's still, you know, it's a secondary market, but it was strong financials and everything on this opportunity. But you know, it was Q1, so, and it was kind of like literally right after Christmas, so you know, I couldn't get anyone on that one. So
Yeah, this is a quick question. What do you guys think the best way to raise capital would be?
Well, you have to put yourself out there and talk to everybody. That's the most important thing.
Mhm.
I think networking is huge.
Mhm.
Creating a strong CRM, having a newsletter, online presence. Like I know of Stefan, you know, you see a guy like that everywhere. So if I would see his name attached to a project, I'll definitely look at the project. That's just
Right.
me personally. You basically invest with the people who you trust and who know stuff.
Oh,
So if you're knowledgeable, in a lot of there's a huge chance that somebody will go with you if they see you everywhere. Like for example, I see a lot of investors are writing books, speaking at seminars, things like that, putting themselves higher on that level. And obviously, when you know somebody who has written a book, you automatically think, that guy's smart. He knows something. So let me see what he's talking about. So it's that one thing. It takes a while to build up. One person told me a funny thing. If you want to raise capital now, you have to start 2 years ago.
Oh,
So yeah, so
funny.
I told him, I'm like, listen, 2 years ago, I was a graphic designer. I didn't know anything about real estate. I was not a real estate a syndicator or investor. And he's like, well, that's how it works. You plant the seeds 2 years ago, and you nurture them, watch them grow, and by the time you have a deal 2 years later, they're already accustomed to you, they know you, and most likely will invest with you.
Mm.
Yeah, Siraj, I'll second what Vlad is saying. One other thing, you can't be a secret agent. You have to let everybody know what you're doing. Everybody needs to know that Siraj is a commercial multifamily investor. You know, whatever it is that you do for your 9 to 5, like literally, I still have a 9 to 5. But people ask me, what do I do? That's the first thing I tell them. I'm a commercial multifamily investor. And I go into my little elevator pitch, and that's it. That's what I tell people that I do, because that's who I am. That's who I know that I am. And let me see, raising and you know, like he's saying, social media is out there. You know, get out there and put yourself out there. Let people know, you know, who you are and what you're doing.
Oh, okay. Thank you so much on that.
Well, you can align yourself with somebody, with like a team, because team is huge.
Yeah.
You know, you just you can have an amazing deal with great numbers, even in a great area. But if the team is weak, people will not invest, because it's and even if they do and something happens, they'll never invest with you again.
Yeah.
So it's team is very important. Like I'm extremely selective when it comes to teams. I have to work with people for at least, I would say, 6 to 8 months to know them, to figure them out, and you know, and click with them. That's huge.
Yeah. Oh, okay. And then as far as like looking for that team, what's the best way to find a team? I'm guessing it's networking through like events and such.
Yeah, just like now, just like you're doing now. I mean, I joined a mastermind, so you can do too. There's a lot of them out there. I joined Jake and Gino, but there's multiple others.
Wait, are these like are these like websites or?
No, they're like multifamily masterminds. They're nation-based, nationwide.
Oh, okay.
And for example, like I'm in New Jersey, how can I buy in Texas? So I immediately reached out to people in the community who buy in Texas, and started providing value, started underwriting, started participating, helping, just doing whatever. And eventually, you know, formed my own team with people who I really click with. Now we underwrite 12, I would say 10 to 12 deals per week. So at least, so because I'm not just a capital raiser, I'm an operator.
Oh, okay. Yeah, that's interesting.
Yeah. It takes time. It really takes time. Some people say you can see the results maybe 2 years after you start.
Yeah.
Maybe even later. So it's a slow process.
Okay. So we've had a Badri Molinor on this webinar. Badri, do you have some time to share what you do?
Oh, sure. Sorry, I was muted.
No worries.
Hey, I think I see a lot of familiar faces. So what we do is I'm part of a platform called Avestor. We hope to completely change capital raising and move it completely away from syndications. We have something called a customizable fund, which combines the best features of syndications and funds. We have got a ton of traction. there are really three main implications there. With a customizable fund, you can create an evergreen fund and you can add a deal in 45 minutes as opposed to the 3 or 4 weeks it takes to do a syndication deal. And two, we help you with all aspects of launching, marketing, and scaling your fund, not just giving you a software platform, legal, regulatory, compliance, accounting, taxes. And three, speaking of masterminds, we have our own mastermind, which is growing rapidly. We have almost 60 funds now. We hope to have more than 100 funds within a few months. And these funds cross-invest with each other. And we negotiate highly, highly preferred terms for our fund managers from sponsors who want to raise money from their deals. I can give various examples. Sorry if that was too long, but that's kind of what we do.
No, that's great. Actually, the mastermind part, I think we didn't get that much into, like when you were on this show actually before. But yeah, the customizable fund you guys have it's a great product. I'm a fan myself.
Thank you,
And
Stefan. I appreciate it.
Right. Yeah. And so how does your mastermind part work? You sort of like leverage the community of operators and funds that are on your platform.
Basically, what happens is anyone who creates a Avestor fund is part of a mastermind, and it meets every 2 weeks, and maybe it will make it weekly also. And fund managers interact with each other, discuss strategies, they invest with each other. But more importantly, we get preferred terms from vendors, and we invite selected sponsors who are giving preferred terms to fund managers and who have good deals to present their deals. And there is a ton of interest. Imagine 60 funds raising for you. Who would not be interested? So,
Right, exactly. And on your customizable fund main kind of offering that you guys have, so essentially it's kind of like a single PPM up front, and then one can raise all their deals under that with the same expenditure, and sort of shortens the subsequent process afterwards and so forth.
So significantly. I mean, literally, you can add a deal in 45 minutes. Tell me, when was the last time anybody did a syndication deal of your own in 45 minutes? So
right, yeah, exactly.
Several weeks, right? So yeah. And you have one PPM, you have one Blue Sky filing, one LLC, management LLC, and one fund LLC. And so less taxes, less accounting. That's where the savings come in. So.
Right. And sort of simplified financial reporting. One, is it like a single K1 or for all?
Single K1. Thank you. You have an excellent memory. So investors, even if they invest in multiple deals, get a single K1. Our investors absolutely love that. And so basically, it's the idea here is to completely streamline capital raising, both from investors and a sponsor perspective. So, and the fund works for people who are doing their own syndication deals, and it also works for people who are capital raising for others. So we are enabling a completely new type of individual deals. For example, many of you may know Ash Patel. I don't know if you know him. He is the host of the Best Ever podcast. Sure. And he created a fund on our platform, and he thinks it's a game changer because he does sometimes smaller retail deals, raising $500,000 or $1 million or $2 million. By the time you get a PPM for a deal like that and you pay for Blue Sky filings, you're not making any money, So you can even do small deals in the platform and add it, and then investors can pick and choose which deal they want. So.
Right. Yeah. From what I remember, you sort of, once you have your customizable fund, you can decide you want to do a duplex in there, and sort of if you want another duplex or something, it's within the same.
Any asset class, self-storage. We have funds which are mobile home park, self-storage, retail, hospitality, judgment liens, believe it or not. I mean, that's I'm shocked at how much returns you get in those. Music streaming rights, just a gamut, yeah. So
but it's still not the fund return that people get, it's the return of each individual property that they invest in, actually.
Exactly. Right, so somebody asked me, okay, what do I advertise as a fund level return? Nothing. That's like me asking, hey, what's your stock portfolio? What's your return? Well, it depends on what stocks you buy. So you are advertising one deal at a time. And so that doesn't dramatically change your marketing strategy. You're still saying, okay, there's one fund at a time, and one deal at a time, and it kind of fits in with your existing marketing strategy, So I do see some new people. I know many of you, but I'm putting my information in the chat window. Happy to reach out if you just want to talk. Either if you want to raise capital for your deal, or maybe you're interested in a customizable fund. Maybe there are other ways we can work together. Would love to hear from you.
Absolutely, yeah, that's great. That's great. And so that's avestorink.com, right?
Yeah, badri@avestorink.com. Yeah, I put my full information in the chat window.
Awesome. So, yeah, Scott, do you want to go next? I know you've been.
Hey guys, yeah.
But go ahead.
What's that?
Go ahead. No, go ahead.
No, I feel like I've shared my story with the group a couple times before, so I don't need to go too much into it unless anyone has questions. But yeah, I guess to share what I do, right? Primarily, I'm a residential investor and developer, and that's what I've been focused on for the past year, 10 years. But for the past year, I've got 3 projects in the works here in Scottsdale, Arizona, in various stages of development. And so once I build these houses, my plan is to start focusing more on commercial multifamily. That's why I like to attend these meetings and learn as much as I can. I have done a couple of commercial deals, one medical, one office, but I've not done any multifamily yet. So that's definitely a goal in 2023, is to stop flipping so many houses and get more into buy and hold deals. And so I'm here to learn as much as I can. And I'm kind of maxed out right now, so I'm not really in a position to be taking on much more than what I have. And I'm just crossing my fingers and praying that I do get out of these deals alive, because the market's taking a turn. And Stefan always likes to remind me that I'm in one of the worst markets in the country right now.
It's one of the best ones, but I mean,
one of the best, but one of the hardest hit as well, at least in recessions. So we'll see what happens. In all seriousness, though, with these 3 houses, my plan A is to sell them. Plan B is, if I can't sell them, to hold them. Whether I convert them into long-term rentals or short-term rentals, I'll just decide what the best fit is when that time comes. But these deals won't bankrupt me, but they'll probably cause a few new gray hairs this year for sure, if the market continues to get uglier as it has been. But that's my story. So, yeah.
Yeah, so Scott, so if you guys haven't seen Scott before here, he's been on our show as well. So he's got a YouTube channel that is great. You post videos, I think, like twice a week over there, and more recently have been, active on Instagram as well, right? So Scott is a bit of a YouTube star, isn't it, right? Yeah.
I guess you could say that. I don't bring that up initially just because I know this is a real estate investing group. But yeah, if you're into real estate news and drama, and if you want to follow along with some of my house flips, you can follow me under my name.
That's awesome. That's great. And yeah, thanks for sharing. Thanks for sharing with us. So I don't know.
Yeah, thanks for putting me together.
I don't know who to pick next. Nobody has their camera on, so I guess maybe maybe that's good for today. So anyone else want to share something before we kind of wrap up? Any exciting stuff, like next steps, things you guys are interested in partnering potentially, or
can I ask a question?
Yeah, go ahead.
Does anyone have, we have all kinds of resources, accounting, CPAs, legal, and all that. But one thing we want to expand is our list of marketing resources. So does anyone have any recommendations for, low cost may be an oxymoron, but relatively low cost marketing agencies, people who build ClickFunnels, especially independent contractors? I know there are large agencies. That's not what I'm looking at. Social media campaigns. Any recommendations?
I never had any success. I do like my own basic social media. So with basically one person helping me. I never used an agency. I'm not sure if somebody else actually.
Sorry, I shouldn't use the. I mean, I didn't mean to use the word agency. I don't. I'm not looking for a large company.
Yeah.
I'm looking for individual contractors. I mean, you don't need to be a
Like
billion company
somebody
to-
on Fiverr and so forth.
Maybe
I have
that.
someone
Or, yeah.
You know, I
I have
think
someone, Badri, who might be a good fit for that. I'll put my email in the chat. If you send me an email, I can put you in touch with him. He's
Okay.
just a one-man shop, but he's done a lot of work for me. He helped me build out all my landing pages and funnels and run ads. And so he is only one guy, so there's only so many hours in the
Which
day.
is okay. Which is okay. I mean, sometimes, see, we have funds of all types, right? Some have large marketing budgets, and some, well, they don't.
Yes.
Hey, Badri, I thought I had connected you with Orion before.
Yeah.
I heard the hesitation there.
Let's say it's been mixed bag. Let's leave it at that.
Okay. Yeah. You know, you have to work with them for a little bit so that they can you know, I've been working with them now for I guess about 6 months or probably a little bit longer. Yeah, about 6 months. And we finally, you know, turned the curve, and
I see.
things are starting to turn around.
So I mean, what do they do for you? They run, I mean, you've taken one of their packages and they do your social media
Yes.
and everything else? I see.
Yes.
Got it. Got it.
And
they're don't get me wrong. I mean, especially in a public forum, I don't want to, but it's just
Right,
that
of course.
a couple of funds had mixed results with them. And so,
Okay.
Yeah. But that's good. So you're getting, they're running independent campaigns and you're getting investors, new investors investing in your deal. So,
I'm getting leads, and then of course I have to
so you'll have to
nurture
convert.
those leads.
So,
Yeah.
what is maybe this is a loaded question, but I think the others might be interested too. What is your average cost per lead?
Wow, you hit me over the head with that one.
Oh, sorry.
I really don't want to, you know, say, because, you know, depending on what it is that they're gonna do for you, it may be different than what I need them to do for me.
Yeah, maybe, because they're doing a variety of things for you, whereas the average cost will be lower, obviously, if all they're doing is running a campaign, right? So,
Correct.
that's fair.
Yeah, the more that they put on their plate, the more that it's, you know, gonna cost for you. But I, you know, again, I'm still like a one-man shop, and it was affordable. It was affordable for me. It may not be affordable for others. But also, Scott, I do have your email address. I'm gonna call you, you know, I'm gonna email you to maybe find out, you know, what this guy's costs are.
Okay.
Yep.
Cool. Yeah, I'd be happy to put you guys in touch.
Thanks.
Yeah, I think Badri, actually, I remember I was mentioned the guy. I haven't used him. I didn't have the time to connect, but I was mentioned the guy. I think he does like it's other industries, not real estate, might be in like music and you know, kinds of other industries, but he's done like campaigns for like different people on Instagram, and I think he has his own, maybe has like 100,000 followers himself or something like this.
I see.
It has been able to grow like some people's Instagram, maybe a bit like maybe what Scott a little bit has been doing more recently in terms of reuse, perhaps, and like things like that. But he kind of sets up like reuse and other campaigns. I don't know if that's necessarily the most suitable for your product or not, but that's one guy. I'm gonna ask.
Just to be clear, it's not for our product. We already have our own marketing agency. This is for fund managers who are looking to promote their own fund, who are all just like you. I mean, they're promoting a deal. I don't mean to generalize everyone, but hey, they're promoting deal. They're trying to get investors. So it's not for Avestor. It's really for Avestor fund managers. So
right. Where, like you mentioned, could be a smaller fund too, and so forth. And
there are some are larger funds, some are smaller funds. So
yeah, exactly. Okay. Yeah. Let's talk more.
Yeah, thanks you. Yeah, if you have a reference, do send it to me, Stefan. You have my email address. I'll send you a quick email. Yeah. So
I gotta ask for it. I don't have it ready. Like, gotta ask for somebody was gonna give it to me, like the contact of this guy, but you know, so I'll get back to you. I'll get back to you on it basically.
Since this seemed to generate some good feedback, I'll ask one more question. What channel seems to be working for most people? Facebook ads, LinkedIn, the Yako, for example, has a LinkedIn thing. I mean, what channel is generally working for people?
For paid advertising or for just like social
Yeah,
media?
for whatever, for getting investors. It doesn't matter paid, unpaid. I'm just curious.
It seems, I'm not sure if others agree. It seems like LinkedIn is the biggest one.
LinkedIn is the biggest. Okay. Sorry, maybe you guys already talked about it before.
I don't know if that's what others would say. And maybe Facebook is kind of number 2 a bit. It seems like LinkedIn works the most. At least my experience with LinkedIn is just, it's way more views. Let's say I've got a Facebook group, and you know, like I feel like I could grow that group if I wanted to any number of, you know, members. But even if I'm posting it, I'm not necessarily going to get that many views in that group or something. Well, on LinkedIn, it's like very optimized in that sense. It seems like where your post gets viewed by a ton of people, and somehow that aspect is stronger. Engagement appears lower in a way, but the visibility is very high. And yeah, I don't know. I mean, that's what I would think. That's what I've heard from others. It seems like most people say LinkedIn. But again, yeah, do you guys agree? I don't know.
It makes sense. I don't have experience with LinkedIn, but I'll say I had a hard time with Instagram and with Facebook myself running ads. But you know, LinkedIn, just the profile person who's on LinkedIn is more business oriented versus Instagram or Facebook or TikTok. So it makes sense that that's where you'll find the money.
Right. Yeah. Somehow more like thought leadership also. So maybe that aspect correlates with getting investors when you're actually trying to be a thought leader there. And you could do it on Facebook, but I feel like Facebook is a little less reputable as a setting generally. It's like more of a community, like to be in a group or something like that. I don't know. It's hard to say. More for personal things, like sharing like personal stuff. And I don't know. That's just my impression. Okay. So great. So thanks everyone for joining today. So we had some nice exchange. It was great seeing everyone, and let's chat more, and we'll see you at our next events.
Happy New Year, everyone.
Happy New Year. Yeah. Enjoy. Like
Happy New Year.
wishing lots of success to everyone this year. Okay.
Yes.
Yep. All the best.